Amit Chadha, the MD and CEO at L&T Technology Services, is here with us to discuss numbers. Thank you so much for taking time out. Let's begin by talking about the overall growth rate, because that has slowed, from the 6% plus that we saw per quarter 8 to 9 quarters ago to about 1%. Are you confident that this is the bottom and hence a sharp reversal can be seen in Q4?
You were to do the math and you look at 17.5 to 18.5, you will realize the asking rate is about 4%. So I am confirming to you that Q4 will be a good quarter, and that's how we are reaffirming our guidance. And I have confidence based on the deals that we have won, based on some of the deals in play, that we will be there as we move forward. I'm extremely excited about the kind of opportunity that exists for engineering services with India Inc. Globally. So fairly comfortable at this stage.
Right, I just want to further drill it down on that point that you made. At the upper end of your guidance, the Q4 ask rate is 8% QOQ. Is that realistically possible?
There is no miscalculation here. There's a range here. And that's why I told you that the lower end puts you at above 4% and the higher end puts you above, of course, higher than that. And we continue to work on it as we move forward in the year and in the quarter, we'll keep you updated.
Right. So you're on track for the guidance, but any color, would you be close to the upper end or the lower end of the guidance band?
I would not comment at this stage. All I will tell you is we're working towards it.
Okay. Has the contribution then started from BP deal in the third quarter? And if yes, how much was the impact? Also the kind of scale up that you're expecting in the next quarter?
We don't, shall I say, weigh on specific client contributions in a quarter, but I can tell you that the work with BP has started. We have a short-term, medium-term plan. We are working together on that. It's a relationship, and the teams have already started working on it, and we do expect this team to steadily scale up over a period of time, and there will be contribution from BP towards revenues in the current financial year as well as next financial year.
Okay, a word on your margins, because despite no wage hike, there was a bit of a subdued margin performance. Can you walk us through the outlook in terms of the various headwinds and tailwinds that are at play here when it comes to margins?
Sure, thank you. Thank you for asking that. So number one, margins, I'll give you some quantified answer here. So 336 crores PAT, up from 297 crores same quarter 1 year ago. So up about 13.4% year on year. If I look at quarter on quarter in terms of PAT, gone up from 336 crores from 315 crores. Again, an increase of 6.6% quarter on quarter. So I do believe there's been an improvement. Gross margins have improved for us, but we continue to balance between operating expenses as well as investments that we continue to make, because we are a technology and engineering business rather than a generic business. So we need to continue to make those investments. In fact, I'm happy to share with you that we have filed 53 patents in Gen AI with medical, transportation, and regular software-defined use cases. And all this requires effort, requires compute power, requires investments that we continue to make as an ongoing business.
Right. Okay. So in terms of headcount as well, there was a net headcount decline this quarter, right? And will this trend then of a decline continue in the next quarter as well, or are we likely to see a positive number?
So we did on purpose. We did not backfill the attrition we were having. In fact, our attrition's come down to 15.8%. So on purpose, we did not add the headcount because we knew this would be a kind of a soft quarter for us at about 1% growth. But we are actively adding. There are new joinees that have joined us right on 2nd of January. And I do expect they will be fully operational, billable for us in the current quarter. You will see net headcount increase in Q4 and beyond from here. I also want to add two more things. Number one, we have been taking about 2,000 freshers. Every year, we've been making offers to about 2,000 freshers. This is the third year in a row we have done that. And our last bit of committed freshers will join us in the current quarter. And for next year, we've already handed out 1,200 offers in campuses. And we continue to look at campuses for further hiring. and we are stealing up those numbers and firming up those numbers as we speak and as we move along.
Right, and between plant engineering, telecom, transport, high tech, etc., which segment is it that you think is going to drive your growth over the next 6 to 12 months?
So I would say digital engineering, which is digital manufacturing and digital products and software as number one. I would say transportation equally there, and plant engineering. So I would clearly call out these three as winners as phase one, and then I would put high tech as well as medical, if I may, in the second phase, if I may do that. In fact, I would turn things around and say this to you, that if I look at our results for quarter three, we've actually all five verticals for us grew sequentially quarter on quarter, second quarter in a row, right? In fact, medical was at about 2% and transport and telecom came in at about 1% each. Europe and industrial products, these are so Europe is a region and industrial products as a segment hit a $200 million run rate for us annualized in quarter two, right? So I do believe that we did fairly well. Not just that, in terms of deal wins, also the velocity has been similar to the last quarter. There were 6 wins, more than 10 million. In fact, one of them was a 40 million deal in the comm space. The second was a $20 million deal, and then there was a 10 million in cybersecurity. I want to call that out because there was a lot of, shall I say, apprehension as we had bought Smart World. So we've been able to take it global, and the cyber deal is a global deal from a global customer that we've been able to win.
You had aspirations to hit the $1.5 billion mark by FY25. Is that on track?
So we continue to be, that was an aspiration that we have, $1.5 billion revenue run rate. Yes, the aspiration still holds. Current year guidance, 17.5 to 18.5 holds. Does CY24 look better than CY23? I would think so. Born optimist.
I also wanted to hear your thoughts on North America. Given that growth, it seems like growth again has been led by Europe. Any signs of turnaround in United States?
So when you look at our results basically give you by currency, billed currency. They don't really give you by region, they give you by billed currency. So it could be slightly misleading. I would like to confirm to you the highest growth that we have had in the last 2 quarters has been from Europe. Our North America region has also grown in both these quarters and then has been ROW. And I would like to confirm that that's the case for quarter three as well.
Okay, great to have you on the show. Thank you so much for taking the time out and speaking with us and flagging off what the quarters ahead are going to look like. That, of course, was Amit Chadha, MD and CEO at L&T Technology Services. I want to quickly